Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is June 18th, 2019. That sounds more like it. Let's try this again. LTC Perozzi, Exhibit Paparazzi. Man, yesterday I was playing some old bootleg stuff, people. I don't know what Google Play had me on. That lets you know that I'm not a huge Exhibit fan. I didn't recognize it right off the bat. But now hearing this song, I remember this one, Exhibit Paparazzi. I'm just going to show you guys really quickly what I had playing yesterday. Google needs to take this off their system. Check this out. This is I found Paparazzi Exhibit. But if you look at all the other tracks and artists here, these are not the real songs. So I don't know what the hell is going on with this. Google, take this off of your Play Music platform. Once upon a time in 96, I don't know what the hell this is. But anyway, what's good, people? Hope you guys are doing well, and welcome to another episode. Today, we're going to take a look at, finally, more details about this Libra coin by Facebook. I had one out of TechCrunch, but this one out of TechCrunch is just entirely too long, people. I don't know what the hell. Facebook must have paid them or something. But look at this. I'm scrolling through, and you can see in the top right corner here, the progress circle. This thing goes on and on and on and on. So clearly a PR piece, I believe. TechCrunch probably got paid for this. We're going to take a look at a condensed version out of Decrypt Media. You guys know I love Decrypt Media, so we're going to look at that. Also, Bitcoin evangelist Andreas Antonopoulos, who I just spoke of yesterday, I said that they need him to be on that panel or at that lunching with Warren Buffett. I think more him than anyone else. But anyway, he's talking about this Facebook Libra coin. It isn't a real blockchain. Well, I think we all kind of knew that. Well, at least we thought it wasn't a cryptocurrency. He's talking about it not being an actual blockchain. So we're going to take a look at details of that after we read the Facebook article. And then thirdly, we've got a user from Twitter claiming that the TradingView Fibonacci retracement tool has many bugs in it, and it's been there for over 5 years now. So some of you are traders out there. I don't use the Fibonacci tool too much. Here and there, I'll use it on a higher time frame, but I haven't really in many months now, though I do believe it is a great tool. We'll take a look at what bug this particular user said he's found. But before we get into those articles, definitely want you guys to check out moonlambotees.com. You can save 10% if you use the word CryptoBlood10 at your checkout. Not sure when this promo will end, so make sure you guys take advantage of that ASAP. So let's take a quick look at the heat map for today. Bitcoin is down 1.65%. Ethereum's down huge 3%, and Bitcoin Cash down over 5%, 5.3% at $407. EOS is taking a big hit today, down almost 5% as well. So if we take a look at my chart from yesterday, wow, will you look at that? I actually drew this line yesterday at about right here. So you can see it's following this line pretty accurately. I wasn't expecting to follow it to a T, but the general consensus, as you can see, it bounced off of that trend line, and we're kind of starting to head higher, and we'll see what happens from here. But again, I think we'll tread kind of in between this area that I've drawn, the yellow horizontal line and this trend line, until we do a breakout, I think, to the upside. But again, be reactionary in your trading. If you're not in the market or looking to add positions, you could add some here and put a stop somewhere below this area where we've kind of created a new trough, or wait to a breakout. So put some limit buy orders above the market at here at around 95.50, and you'll catch that. Hopefully you'll catch the order, buy you in at that point. So there you have it. That's how you play it. Let the markets come to you. Don't chase those markets, people. Again, first article is about this Facebook reveal that happened today. Actually, it says here, Facebook reveals Libra, its monumentous new crypto, to the world. Facebook says its stablecoin, quote unquote, will empower billions and underpin a stunningly ambitious global economy without selling your data. After 2 years of speculation, Facebook has finally unveiled Libra, a cryptocurrency that it says will empower billions of users around the world by giving them access to financial services while providing an easy-to-use form of digital cash for everyone else. The software is being released today on a testnet under an open source license that Facebook hopes will encourage a community of developers to grow around the currency. If all goes well, it could be released to users early next year. I personally think that it won't all go well and they'll get hiccups with regulatory hurdles, because you have to think here. This coin is a direct threat to the Federal Reserve. And I mentioned this on my Off the Chain, the last one over the weekend live show that I try to do every weekend. But if you didn't catch it, check it out. But I talked about how I think the Facebook coin is a direct threat to the Federal Reserve. So I personally see some type of hurdle or kind of delay in their rollout of this token or coin or whatever you want to call it next year. I just don't see it happening. So we'll have to see. That's just my gut feeling. The article goes on to say here that the former executive at PayPal who oversaw the project told Decrypt Media, "I want to see this thing be around hundreds of years from now. Facebook and its partners, 24 so-called validators that will run the proprietary blockchain network, will govern a vast underlying reserve of liquid assets that will imbue the Libra currency with value and slowly generate interest, like gold once did for the dollar." In addition to releasing details about the Libra via a white paper and other explainers, Facebook revealed that its involvement would be handled through a software wallet subsidiary called Calibra, which will store user funds and act as an initial on-ramp to the Libra cryptocurrency. As has been rumored during the past few months, the network will be built on the Libra blockchain, which will support the Libra, a stablecoin whose day-to-day value is engineered to be relatively flat and not volatile like other cryptocurrencies. That, it's believed, will encourage people to use the Libra for all manner of things, from buying goods to sending money across national borders. The stablecoin's value is pegged to a group of low volatility national currencies, including the US dollar, the yen, and euro. It goes on to say here, unlike previous stablecoins, Libra will not be issued by a central party. Instead, Facebook has drafted in 27 heavily vetted collaborators drawn from big tech like Spotify, Uber, and eBay, also from the charity sector, the Mercy Corps and Kiva, the VC world as well, Andreessen Horowitz, and the financial services industry from those of the likes of PayPal, Visa, and MasterCard to operate as preliminary validator nodes who will each share a transparent copy of a vast ledger of transactions reflecting all the activity on the network. Oh, so you're telling me this is going to be sort of like Federal Reserve 2.0. Essentially, I mean, think about it. You're going to have PayPal, Visa, MasterCard, Spotify, Uber, eBay. They're all node providers of validators. That's essentially what you look at the central bank system. You've got Central Bank of Dallas, you've got Chicago, Atlanta, all these private banks, central banks that make up the Federal Reserve System. Sounds just like that to me. No different. Actually, this is worse. There's no paper. It's all digital. This, people, is that global coin that the economists on the front of that magazine, they had the global coin, the one world. This is it. This is it, people. So just be aware. These collaborators, which of each pitched in $10 million for the privilege of joining the network, are the so-called founding members of the Libra Association, a Switzerland-based not-for-profit that will oversee the development of the Libra network, a Byzantine system of governance which each node participating in regular votes on key proposals is intended to hold them accountable. Facebook hopes that the system will be able to onboard billions of users over the next 5 years into a more efficient monetary system accessible to anyone without rent-seeking middlemen. Each device or node holds a copy of the ledger of information that can only be updated when each participant in the network agrees to it. The technology underlies cryptocurrencies such as Bitcoin and Ethereum, neither of which rely on gatekeeping third parties to admit new participants. Because there is no central point of control, anyone with an internet connection can participate in a traditional blockchain network. A permissionless system, many think the technology can serve the billions of underbanked or unbanked people who, through no fault of their own, are shut out from the traditional banking structure. Facebook espouses the same conviction in their technology, yet seems to think that most have done a bad job at actually implementing it. Marcus, who helms the Libra project, told Decrypt that many of the decentralized digital currencies that have attempted to use the technology, including Bitcoin, have failed to live up to the singular promise of being scalable. They can't be rolled out to billions of people without slowing down or collapsing. So it kind of goes on and talks about, scalability and how they'll be able to scale. So then the article goes on to talk about Facebook's secret. It says, at first blush, the white paper reads like that of a typical blockchain startup, replete with odes to banking the unbanked, gestures at financial freedom, and side swipes at other less scalable projects. Software engineer and crypto expert Jameson Lopp, who's familiar with Libra, said the project actually resembles Ripple, which also governs a consortium of validators. Similarly, many of the ideas discussed in the technical paper are popular among Bitcoin developers, but Ripple and the hundreds of other cryptocurrency systems that have slow to reach mass adoption most likely never will. And Charlie Shrim says, if anything, it will render Ripple useless. Libra's particular strength is that it has several multi-billion-dollar companies backing it and 2 billion users who Facebook hopes stand ready to use the coin. This really is Facebook's gambit, introducing the cryptocurrency to intended users via the tools that are already deeply ingrained in their lives. This is very true, I have to admit. Becoming permissionless. So Marcus recognized that the Libra network, incomplete as it is, has a long way to go before it is able to inspire confidence as a decentralized system. He acknowledged that a close-knit group of big tech incumbents could collude and that Facebook's guiding role in the project could arouse suspicion. In light of this, though, Facebook aims for the project to be fully permissionless rather than permissioned, where membership of the association is only granted to a select few after 5 years, and transition to proof of stake network. That network will admit investment grade validators from other parts of the world, making it harder for bad actors to collude. 33% of the nodes can fail or be compromised without affecting the system, according to the white paper. So they aim to have this get to 100 new validators by 2020 and achieve something close to 1,000 transactions a second, roughly 200 times the sum Bitcoin can currently handle and around half the capacity of Visa. But there is a problem, it says. Facebook doesn't exactly know how to become functionally permissionless, because great expansions in node distribution often come at the expense of performance and efficiency. The hope is that by releasing software under an open source license on testnet, as well as offering lucrative research grants, Facebook will be able to convince developers to help it come up with a solution. So really, this article is just about as long as the one in TechCrunch, but I want to just go over the regulatory approval section, which is where I think they'll find many hurdles to get over and roadblocks. Marcus said that Facebook was working closely with regulators to ensure the cryptocurrency complies with regional laws. The coin is not being positioned as a security. As a stable coin, its value is engineered to remain flat. Likewise, he confirmed that the Libra Association would work with law enforcement to combat criminals attempting to siphon funds through, say, the dark web, and they'll give up know your customer information if warranted, meaning permissions across Libra's front end and back end can be sealed off upon requesting from law enforcement, that is. So again, this is if you guys just want to go ahead and just upgrade to the enslaved system that you're already in, this is a great tool. I think a great blockchain for you. All jokes aside though, this is gonna, I'm telling you, this is gonna gain traction. It's hard not to. They already have the ecosystem. They have the verticals there already to implement this. Again, my thing is, I don't think the U.S. Federal Reserve or, the government in that side of things, the Federal Reserve influence, will allow this to get through clean with no hiccups. I just don't see it happening, people. You guys let me know your thoughts on that. Do you think this is going to just launch with no trouble? I mean, I know that they're going to be able to get developers, and they're going to be able to scale up quickly, and they're going to get users and all of that. But do you think from a regulatory standpoint, they're going to get that green light? I don't think so. It's not as simple as good guys versus bad guys. Unfortunately, I wish it was. It would make life a lot easier. There are complexities in this system. Again, I think it's going to definitely garner strength in adoption and usage, but I just don't think it'll be that fast, because they got to get past the government on this one. If that senator was talking about Bitcoin was a threat, no, this is a threat. This is a total threat to the Federal Reserve note. I mean, I guess you do still need it, because the coin, the Libra coin, is a basket of fiat currencies, so there would still be some demand, but less demand, because if you saw, it said yen, dollar, and euro. So if this really takes off, you may have countries deciding to use Libra coin to settle trades and stuff, instead of just using the petrodollar or the US dollar. So that will cut the demand for the dollar by 2/3, right? You guys let me know your thoughts on it. Second article is again about this Facebook coin, and some words from Bitcoin evangelist Andreas Antonopoulos, who I really have a lot of respect for. And he was one and the only person on YouTube back in 2013 that had a clear, concise way of explaining what Bitcoin was. Antonopoulos believes the Facebook project is another beast entirely. Answering a question submitted to him, he explains his position on Facebook's Libra coin. So firstly, he joked about selling all of his Bitcoin to get into Facebook's crypto. The speaker then talks about this understanding of the project and why it doesn't concern him as a threat to Bitcoin. He says, what Facebook or any company like Facebook is proposing is not a cryptocurrency. It doesn't have any of the fundamental characteristics of cryptocurrencies. It doesn't stand on the 5 pillars of an open blockchain. In fact, it has none of those. He then explains the pillars of an open blockchain, which are: it must be open, it must be public, neutral, censorship resistant, and borderless. The famed Bitcoin evangelist says that Facebook's project fails all of these tests on numerous accounts. As such, it's not a blockchain nor something for real blockchains to worry about. He explains that centralized companies like Facebook cannot create something that matches up to Bitcoin in every way for legal reasons, among others. Very true on the legal reasons part. Like, it's just going to be so hard to comply with every jurisdiction, and they're going to have to spend hundreds of millions of dollars to enter new markets. See, with Bitcoin, it's permissionless. We don't have to ask or look for permission to use Bitcoin in China, in wherever. Even though China has banned it, people still use Bitcoin. It goes on to say here, you can't beat Bitcoin. The other side of it is there's less benefit to create a decentralized cryptocurrency. You would have to compete with others to earn your way there. By centralizing the blockchain, you're able to control what happens within it. Reportedly, Facebook won't have full control over Libra's blockchain, but that doesn't mean it won't have other significant influence. So in essence, to say that Libra doesn't belong to Facebook is just nonsense. And according to experts like Andreas Antonopoulos, that's precisely why whatever Facebook is building can't be considered a cryptocurrency. In effect, it's a new digital means for people to transfer money. In other words, cryptocurrency gets tossed around enough, it certainly means that more people will become interested in the broader scope of the industry. Exactly. All this really is, guys, is e-money 2.0. E-money came before Bitcoin, and it attempted to do what essentially Facebook is getting ready to do. Just fancied up a little bit more. E-money, or Liberty Coin, I think it was called, or something. Well, guess what? Because it was centralized, it got shut down by the government. And that was the end of that project. So, you can't shut down Bitcoin, and that's a good thing. because it is it's more of a cryptocurrency than not. You know, there are some centralization issues, though as a community, as a network, we can mitigate and solve some of those. Scalability wise, yes, Bitcoin will not scale. And Lightning Network solutions that are out there, I don't think will work either. Bitcoin will be relegated to being a digital asset. And that's fine. We have tons of other blockchain projects that are out there and will take that reign from Bitcoin as far as it being scalable, you know, using applications and dApps and even, you know, money on top of other platforms. But none of it will ever replace, I won't say ever, let me not say ever, but none of them, at least today, I don't see any of them replacing Bitcoin, because Bitcoin is the first one, and it's kind of like no one knows. We have our speculations on who created it, but it's out there in the wild. The network effect is there, and you can't stop it. That's the biggest thing. So, you know, I still think I was at a talk today. People are interested in this Facebook thing, and we have to do a good job of delineating or differentiating what the types of ripples and Facebook coins, what those are versus what Bitcoin is, from a currency slash asset perspective. It's totally different. And we need to educate newcomers on that and help them understand what is a true cryptocurrency and what isn't. And so the next article, I'm not even going to have time to do today. That Facebook article from Decrypt was almost as long as the TechCrunch one. I'm going to get to the Trading View bug tomorrow. Let me know your thoughts are about this Facebook thing, man. It's pretty deep, what they're trying to do. And I think they're going to succeed, but we have to succeed as a crypto community in educating people what the difference is between the two. We don't want them to fall down the wrong path. So yeah, again, let me know your thoughts about that, and we'll have that discussion in the comments below. Shout out to my man LTC Perosi again for the song request. We're doing it a second day. I totally messed that up yesterday, bro. Thanks for the song request. Exhibit Paparazzi. It's your boy Crypto Blood. Make sure you guys like, share, and subscribe, and click that bell. I'm out of here, people. Holla!